From the University of Westminster, this is The Week Ahead with Dave Coker.
All right, guys, welcome. This is The Week Ahead. It's Sunday, October 18th. My name's Dave Coker. Let's see what's going on in the markets over the next 5 trading days. Once again, this series of videos comes out every Sunday night, and they're intended to help you anticipate changes, I should say, in the capital markets and structure your portfolios accordingly so you will make money. All right, what's going on? Oh my God, my animation, I'm so sorry. Let me just put it all up there, okay? All right, in terms of the key events that you have to keep an eye on, these are high-level things, guys. In the States, we've got talks between the Democrats and the Republicans about another stimulus package. The Republicans have put something forward. The Democrats have put something forward. The difference is in the money. The Republicans want to push out $300 billion US. The Democrats want to push out $2 trillion US. So we'll have to see what happens. Time is really running out because they're going to break. Our elected leaders in the states are going to break for the election. And the election's in about 18 days, I think. And basically it's time up. There's no time left anymore for this. Next, just like we saw last week, corporate earnings being reported for second quarter. Now, this second quarter was all coronavirus all the time. So we're going to get some good insight into the resiliency of some companies, as well as the damage that's been inflicted on other companies. On the whole, earnings have been so far, but we only kicked it off last week. So we're going to get into high gear now this week. Third thing, housing and jobless claims coming up. All right, so we got some data. We'll get into it in the on the key days when we get into Tuesday and Wednesday. But these are things that potentially could rock the markets. Brexit, yeah, this is going to whack sterling. Boris is looking like he doesn't want to play with the EU at all. He's going for a hard Brexit. And the EU is saying it's not our fault, and who knows where the truth is. It's sort of someplace in the middle, really. But pay attention to it because it could whack pound sterling. If you don't reside here, if you don't make your money here, that's cool. If you want to bring money in, it might be a good time depending upon what currency we're talking about, USD or a developing market currency. But pay attention to it. And then Chinese GDP. Boy, I love this stuff. Because, I'm really offended by what America's doing in terms of messing around with ByteDance and TikTok and just blaming that Huawei was a disaster as well, a tragedy that they outlawed it in the United States. So now Chinese GDP coming in at about 5.2%, accelerating. Prior quarter Q2, it's forecast to come in at roughly 5.2. Prior quarter, it was forecast to come in, or it actually came in at 3.2. So this is absolutely wonderful. We see Chinese GDP recovering, and the Americans are getting a good taste of their own medicine, and that the Chinese economy is surging ahead. And remember, guys, what I've said, if you look back and view World War II as the event that seeded global leadership, global economic leadership of the globe, of the planet, I should say, from Britain to the United States, I maintain, and I've put this in my research notes as well, I maintain the COVID crisis is going to be the event that we look back in maybe 5 years and say that is what pushed the Chinese economy up and ahead of the West, in general, specifically the United States. All right, we're going to look at the S&P 500 for the past 1 month. Not a bad performance, guys. Once again, you know how to read this by now. Green is good. It's like greed, right? Greed is good. Green is good. Red is bad. Red means we're seeing prices drop. Green means we're seeing prices go up, and it comes in a continuum of hues. So the brighter the green, the brighter the red, the more extreme the loss or gains or losses, respectively. But not a shabby deal over the past month. Amazon up about 8.7, Apple 7.87, Microsoft. You can see it's sort of centered in what we're calling the FAMS, FAAMGS stocks. But we do have some activity up there in consumer defensive, I should say. Walmart, Procter & Gamble, actually doing fairly well. And once again, down here in the bottom, I always like to look at Berkshire Hathaway. BRKB, down about 2.82 over the past month. You don't buy it for share price appreciation over month-to-month period. This is actually price to book. I'm so sorry, my title slide's wrong. Guys, this is price to book. And what we're doing is looking at the share price as a function of the book value. And you can see Amazon trading for the same presentation convention as before, green and red. And you can see Amazon is trading for an astounding 22 times the value of their assets. Apple 28, Microsoft 14, very, very highly valued stocks. Facebook, they do generate a lot of money, but they ain't got nothing. They don't own too much. 6.86. Now, once again, take a look at Berkshire Hathaway, trading essentially for book price. Now, here's a tip, guys. When I buy shares, and I do, I'm very active in the market. When I invest in the market, one of the things I look at is price to book. I never overpay for a stock. In other words, I would be indifferent about buying Berkshire Hathaway. It's currently trading at zero. It's basically the share price is the price of the assets, right? Take a look at Bank of America, 0.88. I love Bank of America. My money's in a different direction now, but that's an excellent company, undervalued. JP Morgan, by contrast, 1.33, trading slightly above its book value. So pay attention to that. It's very important. Interesting thing, what are the big boys doing? Well, you can see how the money's flowing. And once again, we see money flowing into gold-backed ETFs. We've been talking about this for a couple weeks now. Lots of money flowing into exchange-traded funds. We know this is a lot of investor money. Professionals tend to buy physical directly. Retail tends to buy ETFs. Now, I'll be honest with you. I do have physical. And as I've shared with you guys, I grab physical every week. Or not every week, every month. But I do have ETFs as well. And I do my big positions in the exchange traded funds, primarily because I don't want to take physical possession of a large amount of gold. What am I going to do with it? Put it in my bedroom? They will come. They will smell it. They will know. And they will come in the night. So no. When I buy physical gold, I put it in my safe deposit box immediately. I don't really know what to do about this type of exchange traded funds. I'd rather take my big positions through ETFs, even though there's some issues associated with them. But you can see the money flow has been pretty profound, rushing into exchange traded funds. Oh, here's another one. I love this one. This is off one of my research notes that I sent out yesterday. Markets irrational. My God, we've got two companies here. We got IAG, who own Just Eat, who own BA, and I'm comparing them to Just Eat. And look at this. You can see here at the bottom, Just Eat has a market cap of 17.7 billion. IAG is worth 6.4 billion. IAG generates about 21 billion, 20.7 billion in income per year. Just Eat generates about 1 billion. And yet it's supposed to be worth more. Yeah, I'm dubious. You're going to watch that Just Eat crater. Well, okay. You know what I think. All right, let's get into the markets, guys. Once again, my animation's horrible. All right, it's Monday, October 19th. We've got a holdover from Sunday. I put it in so you can catch up. But the IMF meetings are still running. I just checked in on them. They're still going on now. So we don't have any information. But pay attention on Monday, or if you're paying attention to the markets this evening, maybe around 9 p.m., I think we'll get a statement from the IMF about what was accomplished. So pay attention to that, potentially market moving. Fed chair, and there's a lot of Fed speak this week. Again, I'm suspicious. So Jerome Powell is speaking at 0800 hours. FOMC member, Fed Open Markets Committee member, Clarida and Hawker, speaking at 11:45 and 1500 respectively. And then we've got 3 and 6 month T-bill auctions. Previous was 105 for the 3 month, and we're expected to come in at 115. Whoops, and that didn't work out super well. Sorry about that. All right, Tuesday, October 20th. 0830, we got building permits month on month for September, expecting a 0.5% contraction. This is key to pay attention to. Let me get the next one. We'll talk a little bit about. We've got building permits month on month in absolute numbers. We're forecast to come in at 1.5 million for month on month for September, and it prior was 1.476. So slight expansion in terms of building permits. Now we pay attention to this, guys, because building permits represent a vote of confidence in the future. The building permits aren't infinite. They typically have a shelf life, maybe 6 to 12 months before you have to start doing stuff to the property, to the land, whatever you're going to be doing. So we pay attention to it because it shows us how optimistic or pessimistic builders are and people that order buildings, entities, companies. 0830 housing starts month on month for September. Prior was a 0.5% contraction. We don't have anything going forward there. 0830 housing starts month on month for September. You can see the absolute numbers here. Prior was 1.476 million. Forecast is 1.505 million. That's actually when they start building. It's pretty wild. when you look at the numbers. And then at 0900 and 1050, we got FOMC member Williams and Quarles speaking respectively. Wednesday, October 21st, 0700s, we got the MBA, Mortgage Bankers Association, 30-year mortgage rate. Prior was 33%. We don't have a lead on it. But again, this shows you how astoundingly cheap capital is in the United States. You're taking out a 30-year mortgage. You're only paying 33% for that money. It's absolutely incredible. 0700 hours, we got MBA Mortgage Bankers Association mortgage applications week on week. Prior was a 0.7% contraction. We don't have a forecast on that. Brainerd and Mester speaking at 0850 and 1050 respectively. See, there's a lot of Fed talk going on this week, guys. So remember, FOMC, Fed Open Markets Committee, they're members that vote, that are on the committee, and they vote whether to keep interest rates the same, to raise them, or lower them. We will not be surprised when the Fed meets and announces what they're going to do with interest rates, because we pay attention when each and every one of these FOMC members speak. Either we listen to it live, we listen to it recorded, or we get a transcript, and we know what they're advising the Fed chair to do in that private meeting. At 1300 hours, you get 20-year bond auction. Guys, got to point this out. Prior was 1.213. Even if it comes in flat, you really want to lend money to the United States government for 20 years and get back 1.213% return on your investment? It's totally nuts. Thursday, October 22nd, 0830. What happened here? There we go. Sorry about that. 0830, we got jobless claims week on week. Prior was 898,000. Forecast to come in a little bit of a reduction, 860,000. Existing home sales, not to be confused with the other metrics we've taken a look for homes. We're actually looking at actual transactions. So September month on month, prior was a 2.4% increase. We expected to come in at a 3.3% increase. 1,000 hours existing home sales for September. Prior was 6 million. Forecast to come in at 6.25 million. Modest increase. At 1130 hours, we got 4 and 8 week T-bill auctions. And don't have a forecast, but you can see prior for 4 week, which is essentially a 1 month T-bill, 9 basis points. An 8 week T-bill, a 2 month T-bill for all intents and purposes, 9.5 basis points. Absurdly low rates of interest. Friday, October 23rd. Whoa, sorry about this. Got Friday, October 23rd, 1400 hours. We got federal budget balance for September, a $200 billion deficit. Run that forward for 12 months, you'll start to see how America's getting itself in deep trouble. Much like we saw happen to England at the end of World War II. They're essentially bankrupt, huge debts. Same thing with America. 1530 hours, we got a lot of CFTC speculative holdings coming out. So I won't go through them in detail, but if you're curious about this, look up the reports. So aluminum, copper, corn, soybeans, crude oil, WTIC that would be, gold, silver, and natural gas. All this stuff is absolutely fantastic. Very interesting to watch, and we'll see what's going on with speculative positions in these markets. All right, guys, this has been the week ahead. Thank you very much for your time. Have a safe and profitable week. Once again, when you start to think about where we are now, where the markets, where the news is coming that might drive the markets higher or lower for the week ahead, you can set up profitable positions and make money no matter what. And this is what we do. Thanks for your time, guys.